Hey folks, happy Thursday to you. And if it's Thursday, that means we're going to be discussing the LAWG 647 model Numberology. There are a number of commodities I think that are worth discussing briefly today. First of all, looking at commodities that may be close to turning their present trend, and we're going to lead off with the December corn market. The December corn market closing at or below 377 3/4 tomorrow will reverse the trend to bearish. Prior to coming here for taping, that market was trading at 376 3/4. So tomorrow's close is a close we want to watch, and the number we're looking at is at or below 377 3/4. We're going to take a look at November beans. November beans, if they close at or below 907 tomorrow, will turn bearish, and they were trading at 947 just prior to coming in here. Now that is not extremely close, but well within the mathematical realm of possibility. And there's another reason I mention it, because we're going to take a look at December soybean meal. Now December soybean meal needs a close at or below 295.30 to turn bearish, and that's a close tomorrow. And it was presently trading at 325, which we can see is significantly further away in terms of just range or width than, let's say, the soybeans and definitely the corn. The reason I mention that is while soybeans may only be 40 cents away from a potential trend change, the soybean meal being much further away on a value basis, soybean meal has been the rock, has been the foundation of the bean or the protein market. Very unlikely that we're going to see soybeans go into a long-term downtrend if not led by soybean meal. So as long as soybean meal stays as strong as it is, and as we take a look into the future, soybean meal does not look like it's going to be very close to turning the trend to bearish for at least another 2 to 3 weeks, maybe 5 to 6. So one other commodity we want to take a look at is the September 10-year note. A close at or below 126.19 turns the trend to bearish, and it was trading at 126.19. And I guess again we're looking at closes of tomorrow to turn the trend. One other commodity worth talking about is going to be the US dollar index. Many people believe the strength in the US dollar index has something to do with the general downtrends or weaknesses we're seeing in commodities across the board. Right now it's going to take tomorrow's close, I should say, a close tomorrow, the September US dollar index at or below 92.438. That's at or below 92.438 tomorrow will turn the trend bearish. Well, you take a look at where the market was at just before coming in at 97.75. You can see that we're over 5% away from getting the value needed to turn this market bearish, which leads one to believe, especially when we look off into the future and see that it's highly unlikely that the US dollar index is going to turn bearish, at least for the next 5 or 6 weeks, that if the US dollar index is having a negative factor on commodities in general, that negative effect could last for a while. For more information, you can go to www.ifgfutures.com or you can email me at lee@efggrp.com. And always remember that there is risk in trading commodities. In fact, let's make that more emphatic. Trading commodities is risky. Always be aware of what your underlying risk is prior to putting on a trade. Again, this has been Lee Gaus at the offices of IFG EFG here in Chicago, wishing you a great trading day and a great weekend.